right, welcome back to the show. Do not forget to check out our YouTube channel for more episodes of Right on the Money, where we discuss financial topics with advisors and fiduciaries right there in your area. Now, our guest today, Fred Griffin, founder of Silas and Ward Financial Group. Fred, always fantastic to see you, sir.
Dennis, it's my pleasure seeing you as well.
Protecting your family and leaving a legacy. So estate planning, I know that it's not just for the wealthy. I think a lot of people think that. So many families end up in financial messes when someone passes away. Why does this happen?
For a lack of estate planning, or a lack of estate planning is one major reason. And when people hear the word, they think it's a big word. It's just having a strategy to have your assets and your belongings dispersed effectively as quickly as possible.
Yeah.
I mean, if you don't put together a estate plan, there's two options. You can have a will created, or a trust. Well, and outside of both of those choices, then it goes to probate. So if you don't have a will, or if you do have a trust, it goes to probate. Well, if you have a will, what makes a trust, because people always ask the question, should I have a will or should I have a trust?
Yeah, it's a great question.
You know, and well, the thing about a will, what you don't want is nothing, because if it goes to probate, they make a determination who gets what. And it could be lengthy, you know, between death and probate court, or when you actually have a date in probate court. It could be costly to your beneficiaries. I mean, or you're like their beneficiaries, and they could need your assets sooner than later, or you could want them to have it sooner than later. Well, a will, if you have a will, once there's a probate court, probate date, which it will be a probate date, everything will be dispersed the way the will describes it to be. But the challenge with that is that you have to wait for the probate date.
Yeah.
Well, with a trust, everything is dispersed immediately when you take your last breath. And that's the benefit, is it transfers immediately. There's no delay, there's no guesswork. The trust is less contested.
I had heard somewhere that probate court is also public.
Yes.
So like everybody could go and...
Yes. And so now they know what to go after. It's public. Yeah.
Okay. So one of the things that I had come across in getting ready for our conversation is that I've heard that there are some definitive risks about not making sure, about having outdated beneficiaries on things like TSPs, FEGLI, and IRAs. What are we worried about here?
If you ever change your mind or your affection for who you want to leave your money to, or if you don't make the change, it's going to be dispersed exactly the way you originally allocated. And if that person, let's say one of those individuals are not living anymore, or anything, you know, it makes it confusing if you didn't update it to or replace that person. Let's say there's someone who passed, and if you didn't replace them as a benefactor or a beneficiary, then that makes it more complicated. Or if you have a new grandchild, or a new friend, or a new charity, or anything that you desire to be the beneficiary, if you don't make that update, it's going to be a mess, because who you originally put as the beneficiary is going to be the beneficiary.
I know that life insurance is a topic that comes up that a lot of people, I don't know if they recognize the role that it can help here. So talk a little bit about that as far as life insurance protecting family income and then also preserving legacy.
I like life insurance a lot for transferring wealth. It is the least expensive way to leave the greatest amount of wealth. And, you know, and people get hung up in the cost of the premium of life insurance, but I think they lose focus on what you're actually buying. So you think about the premium and the cost of the premium, but yet you're transferring to that loved one. It could be millions of dollars. It could be millions of dollars. So outside of life insurance, how do you accumulate millions of dollars. It has to be through your retirement plan. It has to be through your investment assets. It has to be through your properties, and the benefit and the beauty of that is that life insurance, once you leave it to your loved ones, is tax-free for them.
Oh, there you go.
Yeah, it's a tax-free. They receive it tax-free. Many of those other assets, they would need to pay taxes, and it could increase or create an estate tax issue. Let's say you had a generation of poverty, a legacy of poverty.
Yeah.
But someone inside of that, one of your children or grandchildren, and someone says, okay, we're going to end this, and we're going to purchase life insurance.
Yeah.
And it's going to be a decent amount of life insurance. With the right amount of life insurance, you can wipe out poverty in one generation.
You could change the fortunes of an entire family.
Yeah.
And set up, because you see that a lot, where you see people like, gosh, how'd they get there? Well, it's generational wealth.
Generational wealth.
Yeah.
And usually even the attitude about generational wealth or the lack of life insurance, usually the generationally wealthy are the most savvy about life insurance.
Yeah.
But the average, if your father had a bad attitude about life insurance and your grandfather had a bad attitude about life insurance, now you inherited this bad attitude, and it's kind of hard to convince someone of the benefits of life insurance because they've never seen it benefit. They've never seen it work.
What would be maybe the easiest first step for someone who's watching this to not leave this mess behind?
The easiest first step is to schedule a time and develop a relationship with a financial professional like myself. Because the sooner you create a strategy to make a retirement income plan or a legacy plan for your family, the better.
Yeah.
The better. The sooner the better. Because time is, for investments and savings, time is your best friend.
Absolutely.
For not planning or investing, timing could be your greatest enemy also if you don't have enough time. You know, many years ago, Dennis, I was a pharmaceutical rep. And when I was a pharmaceutical rep, it was unethical and illegal for pharmaceutical companies to advertise. And now, and the reason why it was unethical, because it challenged the medical professionals, the doctors, of being able to practice and give recommendations.
Oh, yeah.
Because if they see it on the television or if they see it on social media, they're now advising the medical professional what they want to do. We now, as financial professionals, have that same challenge where people are getting information and they're coming to us telling us what they want to do. And some of them are very, sometimes you have to just throw up the white flag and say, I can't help you.
Yeah.
Because they're not in the mindset to be helped, because they have already made a determination and in their mind that this strategy may take 10 to 15 years of funding. They receive the information right now, so they think they can execute it right now and benefit from it right now.
Yeah,
and that's many times a myth.
Folks, that is exactly why Fred's contact information is up on the screen. So if you have questions, you owe it to yourself to reach out to Fred. Fred, thank you for being here, sir.
Thank you.
So don't forget that you can watch full Right on the Money Show episodes on our official YouTube channel or at rightonthemoneyshow.com. That is the spot where you can get up-to-date financial news and insights from the top insurance and financial professionals in your area. Thank you for watching. We'll see you next time.